stock's red flags juices in less than 5 minutes. Every long-term investor wants to buy the undervalued shares, I mean the shares that are less than their fair or intrinsic value. Every drop in the stock price is an opportunity to buy at a discount, but it is possible that the reason for the stock price actually declining is one of the red signs that we will talk about today. The first sign that you should pay attention to is the amount of debt the company, capital structure. The danger is when the company is unable to get rid of the debt hills through its free cash flow. And the reference to that is when it is an indicator, low interest coverage ratio. And the fate of most of these companies is either to put additional shares on the stock market so that they can collect additional capital, which reduces your share in the company, or to take a new debt in addition to the debts that have been perpetuated, and we all know what the end of excessive debts will be. It is true that this is often the case with small companies, but it is not limited to them only, and it is possible that even large companies fall into this trap. The second red flag is that the company does not have a real competitive advantage. Think, dear viewer, that first and foremost you bought the company's stock because you see that it will rise in the future, and this is of course because you expect that returns and profits will rise, but how is that if there is nothing real that attracts customers? If you are similar to competitors, companies that do not have a competitive advantage or fragile companies and will end when the competition heats up. So we note that Warren Buffett and his partner Charlie Munger constantly emphasize moat, which is a distinct advantage a company has over its competitors. Let us move to the third and final sign, which is the fluctuations in the management of the company, so that its executive and financial managers change quickly, which prevents stability and the presence of an opinion and a clear vision of the future of the company. Because, first and foremost, the stability of the captain is the basis for the movement of the ship. It is clear that you have concluded, dear viewer, that investing is fraught with risks, and the only way to reduce them is to invest knowingly and knowledgeably, as Warren Buffett always and forever advises. If you are an active investor, focus only on companies and areas that you understand and do not get carried away by the trend. In general, these 3 red flags are important, but they are only some, and there are of course more. What do you think are the most important signs? And have you personally encountered some of them? Write me in the comments. And thus, dear viewer, you have become aware of 3 danger signals that predicted that the stock price is low and likely to continue to decline. If you liked the episode, don't forget to like and share with your family and friends. Rashad, the presenter of your weekly program Hit the Road to Fire, was with you. See you soon.